Okay, so has Ethereum hit a wall? I mean, compared to Bitcoin and all the other altcoins out there, it hasn't really been doing so well lately. And you've sent me some material that suggests maybe people are starting to get worried about Ethereum's future.
Yeah, there are definitely some warning signs out there, right? Like while Bitcoin has been just soaring, hitting new all-time highs and, everyone's talking about it, Ethereum is still lagging behind. It's still way off its 2021 peak, which was around $4,900, and it's kind of struggling to consistently break past even 4,000.
Right.
And what's really striking is that Ethereum is like one of the few major altcoins that hasn't seen like a significant price pump in this current cycle.
Yeah, and here's the thing that I find really interesting. The research you sent shows that Ethereum has been actually bleeding against Bitcoin since September 2022.
Wow.
Which is crazy because, these are like the two titans of crypto, right?
Yeah.
They're both considered these like, so established blue chip players. They both even have US spot ETFs now, which you think would have opened them up to like tons of, institutional investors and just average everyday investors. But the price action between them tells a very different story.
It does, yeah.
So even with increased accessibility, Ethereum's value compared to Bitcoin has been going down for a while.
It's been consistently underperforming, yeah. And that makes you wonder what's really going on under the hood, right? What's driving this divergence? So I guess the mission for this deep dive is to try to really get to the bottom of why Ethereum has been struggling and then, based on the research you sent, see if we can even figure out if a recovery is even possible.
All right, so let's dive in. One thing that seems to be a big part of this whole story is how Ethereum is dealing with its scaling issues. Specifically through the use of these layer 2 solutions.
Right.
And as we all know, Ethereum has been dealing with like a high volume of transactions for a while now. And their initial plan to solve this was through sharding, right?
Yeah, that's right. The original idea was to break the Ethereum blockchain up into these smaller separate chains, kind of like adding more lanes to a highway.
Right.
But, as Vitalik Buterin himself has talked about, this approach would have come with some, pretty big challenges, particularly with how different applications would interact with each other across these separate chains. It could have made things pretty difficult for users.
Right. And so that leads us to the current approach with layer 2s. And for anyone who's not familiar with these are basically like separate networks that run on top of the main Ethereum blockchain, and they handle transactions kind of off-chain so that it makes things faster and cheaper on the main network.
Exactly.
But what's the catch?
So here's the paradox. The layer 2s, they do a good job at solving the, scaling issues and making transactions cheaper, but they've also led to what we call liquidity fragmentation.
Oh, yeah.
So basically, instead of having all the activity on the main Ethereum network, it's now spread out across all these different layer 2s. And a lot of people think this is one of the big reasons why the price of Ethereum hasn't really been doing well.
I see. So it's like having all these little streams instead of one big, powerful river.
Right, exactly.
Interesting. And your notes also mentioned something about venture capital investment and how VCs are really interested in this whole layer 2 infrastructure.
Yeah, the VCs, they love the picks and shovels, the infrastructure plays.
Right.
And there's a real argument to be made that the investment focus has shifted towards building and supporting these layer 2 technologies.
Yeah.
Plus, moving away from sharding also allows for all these new tokens to be launched within the layer 2 ecosystems, which is great for innovation, but it also means that there's a potential for these new tokens to get dumped, which could, potentially have a negative impact on the overall Ethereum ecosystem.
Yeah, that makes sense. So it's almost like the solutions that were designed to help Ethereum grow might actually be the things holding back its price in the short term.
It's a bit of a double-edged sword, right?
Yeah, and then there's also the user experience aspect of it all, like all these different layer 2s. It's probably pretty confusing for the average person.
It can be, yeah, there are just so many options now, and it can feel really overwhelming for new users. And so some people are starting to look at, other layer 1 blockchains that offer maybe a simpler experience, even if they don't have the same level of security or the same kind of network effects as Ethereum and its layer 2 ecosystem.
Okay, so that brings us perfectly to the rise of these so-called Ethereum killers.
Yeah.
But these other layer 1 smart contract blockchains that are kind of trying to take Ethereum's crown. So who are the main players we should be paying attention to?
So the big names that keep coming up are Solana, BNB, Chain, Aptos, Avalanche, and Sui. There are a bunch of others as well, but those are the ones that are really making waves right now.
Okay. And what are they doing differently? Are they just offering lower fees, or is there something else?
Well, lower fees are definitely a big part of it, but it's also about transaction throughput, how many transactions they can process per second, or TPS.
Right, TPS.
Yeah.
Yeah, so let's talk numbers because your research showed a pretty big difference there.
Yeah, there is a pretty stark contrast. So let's start with Ethereum. So Ethereum can theoretically handle about 119 transactions per second,
Okay.
but in reality, it's usually closer to 15.
Hmm.
And it has over 400,000 active addresses and processes, more than 1.1 million transactions per day, and its total value locked, or TVL, is about $47 billion.
Okay, that's a lot.
It is. But now let's look at Solana. So Solana claims it can handle a whopping 65,000 transactions per second.
Wow.
And it has super fast finality, which means transactions are confirmed very quickly. And it boasts around 2.8 million daily active addresses, which is way more than Ethereum.
Yeah.
And it handles a huge number of daily transactions, something like 277 million, although a big chunk of that is attributed to bots.
Oh, really?
Yeah, and its TVL is around $6.6 billion. So you can see Solana is really pushing the boundaries in terms of speed and user activity. But yeah, you have to keep in mind that a lot of that activity might not be from real users.
Right, right. Interesting. Okay, so what about BNB Chain? How do they
Right.
stack up?
So BNB Chain, they claim a theoretical TPS of 2,222. They have around 1.2 million active addresses and a whopping 6 million daily transactions.
6 million.
Yeah, and their TVL is sitting pretty at about $5.3 billion.
Wow. Okay, so how about Aptos?
So Aptos are claiming they can handle a theoretical 160,000 TPS, and they also have very fast transaction confirmation.
Right.
They're seeing about 3 million active addresses and handling roughly 3.1 million transactions per day, and their TVL is getting close to $1 billion.
Okay.
And then there's Avalanche, which is currently maxing out at just under 1,200 TPS, but they've got this upgrade called ViVi coming soon, which they say will boost that up to 100,000.
Wow.
Yeah, it's a pretty ambitious goal. They have about 104,000 active addresses and are processing about 3.8 million transactions per day, and their TVL is about $1.1 billion.
Okay. And what about Sui?
Sui is the new kid on the block. They're claiming a theoretical 297,000 TPS and the super fast transaction confirmation. They've got a massive number of addresses already, like 78 million, and they're processing about 14 million transactions per day.
Wow, that's a lot.
Yeah, and their TVL is also around $1.1 billion. So you can see there's a pretty clear trend here. A lot of these newer blockchains are really focusing on high transaction speeds, and that's definitely something that sets them apart from Ethereum right now.
It's pretty mind-blowing when you see those TPS numbers next to Ethereum's current capacity. And, it's no surprise that a lot of these Ethereum killers have seen some pretty impressive price gains in adoption during this cycle, especially compared to Ethereum's more kind of lackluster performance.
Yeah,
It seems like the market is really rewarding these faster, cheaper alternatives.
that's right. The market definitely seems to be prioritizing speed and low costs, but we can't forget about Ethereum's strengths. Despite all the competition, it still has by far the largest and most active developer community.
Right.
We're talking about around 6,200 developers working on Ethereum itself and more than 10,000 working on chains that are compatible with Ethereum's virtual machine, or EVM. The technology that powers smart contracts. So even though Solana did manage to attract more developers for a short time last year, Ethereum still has a massive advantage when it comes to developer mindshare. And that's a really powerful indicator of long-term commitment and belief in the platform.
That's true. That's a huge vote of confidence in Ethereum's future. But it seems like the current economic environment is also playing a big role in all of this.
Oh, absolutely. The high interest rates we're seeing right now have made traditional investments like U.S. government bonds a lot more attractive, especially for institutional investors who are always looking for those safe and steady returns. When your research was put together, U.S. Treasury yields were at about 4.28%.
Right.
And the returns you could get from staking your ETH were only around 3%, and that difference can be a big deal for big institutions.
Yeah, especially when they're looking for those lower risk options.
Exactly. So basically, traditional finance is offering a better deal right now compared to ETH staking, and that's likely pulling some of that institutional money away from Ethereum.
Yeah, and your research pointed out that there was kind of a turning point around the middle of 2023 in this whole dynamic.
Yeah, so it seems like around mid-2023, ETH staking yields dipped below 4%, and they've kind of been slowly declining ever since. And at the same time, U.S. Treasury yields went above 4%.
Interesting.
And that timing coincides with when Ethereum's price really started to struggle against Bitcoin and other altcoins. So there seems to be a correlation there, between how attractive those traditional yields are and how well Ethereum is performing.
That makes a lot of sense. And, another thing we have to talk about is the fact that the spot Ethereum ETFs haven't been nearly as popular as the Bitcoin ETFs.
Right.
Those Bitcoin ETFs really helped to push Bitcoin's price up recently, but we haven't seen the same kind of excitement for the Ethereum ETFs. So what's going on there?
So a big reason is probably that the current spot Ethereum ETFs don't let investors earn staking rewards.
I see.
And for a lot of investors, especially the big institutions, the ability to earn those staking rewards is a huge part of what makes Ethereum valuable. So without that feature, the Ethereum ETFs don't really offer any advantage over just holding ETH directly, and they certainly don't offer the same kind of yield as those government bonds. Plus, setting up and running your own Ethereum validator is pretty complicated.
Right.
And that can be a deterrent for institutions that prefer things to be, simple and straightforward.
Right. So it sounds like the macroeconomic environment and the way these ETFs are structured are kind of working against Ethereum at the moment.
Yeah, it's not the ideal situation right now, but the good news is that your research also highlighted some positive developments that could turn things around.
Okay, so tell me about the good news.
So one big thing is the change in leadership at the SEC. They seem to be a bit more open to crypto these days, and that makes it more likely that we'll see approval for staked Ethereum ETFs soon.
Oh, okay.
And that would be huge, because it would give institutions a way to get exposure to ETH and earn staking rewards all within a regulated framework that they're comfortable with.
Right.
That could really attract a lot of institutional money.
Yeah, that could be a game changer. What about this Etherealize initiative I saw in your notes? What's that all about?
So Etherealize launched in January, and their goal is to get institutions more interested in Ethereum by promoting the tokenization of real-world assets.
Okay.
So things like bonds, commodities, real estate, all those things that traditional financial institutions love.
Right.
And they're trying to position Ethereum as the go-to blockchain for this. And it seems to be working. They've got some big names involved, like Danny Ryan, who's a longtime Ethereum developer, and ViVi.
I see.
And they're offering these institutional-grade products, so they're really targeting that institutional money by showing it how Ethereum can be used in the traditional finance world.
So they're building a bridge between traditional finance and the Ethereum ecosystem.
Exactly.
That's pretty cool. And there were also some leadership changes at the Ethereum Foundation itself, right?
Yeah, they brought in Saoei Wang and Thomas Stanczak to take on some leadership roles. And both of these guys have really strong backgrounds in traditional finance, so it seems like the foundation is trying to get a little more focused, maybe even a little bit more institutionally oriented with their development efforts.
Right, so they're blending the crypto expertise with that traditional finance experience.
Exactly, and that could be really beneficial for Ethereum in the long run.
Yeah, I can see that. And of course, Vitalik Buterin is still a big advocate for the whole Layer 2 scaling roadmap.
Oh, absolutely. He's been very clear that the future of Ethereum's scalability depends on the continued development and success of those Layer 2 solutions.
Yeah.
He's basically saying that the L2s need to deliver on their promises of better scalability and lower costs if Ethereum wants to handle all the users and applications that are coming its way.
That makes sense. And, speaking of development, what about this upcoming Pectra upgrade?
Ah, yes, Pectra, it's a big one. This upgrade is going to implement more than 10 Ethereum improvement proposals, or EIPs, and the main focus is on making wallets easier to use and just generally improving the user experience. And one particularly interesting proposal, EIP 7251, will increase the amount of ETH you need to run a validator node from 32 ETH to 48 ETH.
Okay, and why is that important?
Well, it's going to be really helpful for those big ETH holders like institutions because it means they can consolidate their staking operations and manage them more efficiently.
I see.
So it's a direct response to some of the concerns we were talking about earlier.
Yeah.
About how complex it can be to participate in Ethereum staking.
Right. And I saw in your notes that Pectra was delayed a little bit.
Yeah, they ran into some technical issues, so they're doing more testing on the Hudi testnet. But the good news is that if all goes well, we could see Pectra launched on the main Ethereum network as early as April 25th.
Oh, wow, that's really soon. So there's a chance we could see some positive technical changes pretty soon.
Yeah, fingers crossed.
Okay, and we can't forget about the bigger economic picture. Everyone seems to think that the Federal Reserve is going to start cutting interest rates later this year. So how could that impact Ethereum?
Yeah. Well, if and when the Fed does start lowering rates, those yields on U.S. Treasuries are going to go down.
Right.
And that would make ETH staking, even at the current rate of around 3%, relatively more attractive to those investors who are looking for yield. So basically, a change in macroeconomic policy could really make ETH staking more popular again.
Especially with those big institutions, right?
Exactly. Yeah.
Okay, and one last thing you mentioned, that even though there's been some concern about layer twos, the DeFi activity on those platforms is actually still growing.
It is, yeah. And that's really interesting because it shows that the demand for ETH is still there, even if it's not being used primarily for transaction fees on these layer twos.
Okay.
ETH is still a really important asset for things like collateral and DeFi lending platforms, and as a key trading pair in those decentralized exchanges. So
Right.
as those layer twos continue to grow in popularity, that demand for ETH could lead to some, pretty nice price movements in the future.
So it's not all doom and gloom.
Not at all. It's a mixed bag for sure, but there's a lot happening that could really change things for the better.
Okay, so to wrap it all up, Ethereum is definitely facing some serious challenges. There's the competition from all those faster and cheaper blockchains. Its own scaling solutions have led to some fragmentation, and the macroeconomic environment hasn't been very helpful. But on the flip side, it has a huge and active developer community. The Layer 2 ecosystem is growing, and there are some potential catalysts out there like those staked ETFs and growing institutional interest in tokenizing real-world assets.
Yeah, it's a really complex situation. There are definitely some headwinds, but there are also some really strong tailwinds that could push Ethereum forward.
So it sounds like the big question is, is this an existential threat to Ethereum, or is this just a period of necessary evolution, a bit of a bumpy road that could ultimately lead to a stronger and more useful platform in the long run?
Yeah, that's the million-dollar question right now.
It is. And that brings us to our final thought for all of you listening out there, considering everything we've talked about today. What do you think is the single most critical factor that will determine Ethereum's future success?
It's a tough one.
It is food for thought, right? Thanks for taking this deep dive with us.
Thanks for having me.